What are your challenges in 2022 for your company's 401k plan? As we've seen in 2020 in particular, and the beginning of 2022, the market is volatile. During the course of almost any year, the stock market will go up and down, an average of 10%, and about every 3 years, the market will go up and down at least 20%. I don't think about age as being a defining moment. I think about the length of time between now and the time that you're going to retire or you want to become financially independent. Age has something to do with it, but I have clients that are in their 80s and 90s and have 100% of their portfolios invested in common stocks. So if you're going to retire within the next 5 years, you should begin changing your asset allocation to become closer to where you want to be at the end of that 5-year period. In 2022, the amount of contribution that you can make increased from $19,500 to $20,500 per year. The catch-up provision, which is $6,500 per year, did not change from 2021 to 2022. So the most important factor is if you are maximizing your contribution to your plan and you're under the age of 50, you can increase your contribution this year in 2022 by $1,000. The amount of money that you're going to save or I'm going to save is certainly dependent upon our age at this time. I would save as much as you can, which is an easy answer. However, I would at least contribute the maximum amount of money for you to obtain your company's match. So if your company is matching $1 for dollar to the first 4 to 5 or 6%, at least contribute that because you're giving up what we think of as free money. Over and above that, the amount of contribution then depends on what you can afford, especially on an after-tax basis. Because remember that the normal 401k contribution is tax deductible. However, the contribution to a Roth 401k plan is not deductible. So look at your paycheck, see if you can afford a little bit more. And the old rule of thumb when I started in the investment business is if you can save, starting at about age 25 or 30, if you can save 10% of your income until you're age 60 to 65, you'll normally accumulate enough money at that time, along with Social Security, to be able to live comfortably. Your contribution level, generally speaking, can be changed at any time. I don't want to get too technical, but there's something called a summary plan description that all 401k plans and all companies have. You should look at that, but most companies will allow you to make a change of your contribution either quarterly or semi-annually. The reason that they put some restriction in it is they don't want people coming back every paycheck and changing it from paycheck to paycheck, because that just increases the payroll costs for your company. Normally, most of our clients contribute a percentage. However, we will also have clients that say, Rick, I'd like to contribute $10 or $20 or $50 a paycheck. It's okay to start with that. However, if you use a dollar amount, when you receive a raise, the dollar amount stays static. However, if you use a percentage and your income increases, then the dollar based on that percentage will increase as our income increases, or if you receive a bonus. I would rather recommend that you start with a percentage because it'll keep up with your inflation and at least keep up with your increased income. Some of the changes that may be occurring could be changes to Roth rollover contributions, or what we call mega Roth contributions. The administration has proposed some changes to eliminate those. For some more information, please check out our blog because we're going to update that with our CPA and provide greater knowledge and information on these pending changes.